Welcome everyone, this is Thomas from TradeWin. In this video, I will review with you the 50-year study I made about power hours. And it concerns 28 quotes. So for those of you who already know me, this is the plan of the video. I don't know how to make short videos, so you will find in the link in the description the detailed timestamps. So if you want to go directly to the conclusions, you can, but I like sharing my methodology, how I worked, and what are the insights of my studies. So first, I will detail the scope of the study. I will make a quick recall on what I do, and then we will jump into the core of the study about hourly expansions with the conclusions of the key takeaways. So this all began because I was tired to see posts on X about people saying, yes, my strategy works only on power hours and it makes a lot of money. Well then, I have a great news for you. Power hours, nobody shared any insight about this concept. We don't know if this exists, and the purpose of this video is to show you what I have come up with after this 50-year study on 1 hour candle quotes. So this is the core of this video. So the main questions we will answer: do power hours exist? So those power hours are specific hours of the day when price is likely to more expand than during other hours. Okay, that's the definition of the power hour I will keep up with. And if you have studied a bit of ICT, he usually recommends taking entries during specific times. Well, we are about to discover together if those times are effectively the best or not to trade for different asset classes. So what are the TradeWin power hours if they exist? And are there different power hours for different asset classes? If you're interested in these questions, then you are at the right place. I studied that on different symbols, so I would like to cover many different markets, especially Forex, crypto, metals, energy, and US futures. So with that, we'll have a global view on the overall market. A quick recall on TradeWin, who I am and what I do. So TradeWin is the name I give to my technology of advanced backtest for mechanical edges. So I built this tool myself because I really wanted to prove what thousands of YouTubers and influencers were saying concerning their strategy. In general, this technology of TradeWin allowed me to prove them wrong, because no one does the real work of backtesting seriously on the long period of time. So that's what I do at TradeWin. If you know what I do, these are two models I already saw when I was talking about and studying the Judas swing. So the Phantom Judas swing strategy, the Nexus Blast Judas swing strategy. So for the first one, I just proved that, well, this strategy isn't an edge at all for the past 20 years. And each of these 65,000 viewers on the Forex Judas swing may have lost money trading this strategy because it only worked in 2022 and 2023. And for the Nexus Blast strategy, I have seen on X people selling bots saying that that's an updated version that trading the Nexus Blast Judas swing, which is powerful, profitable, and up. They are selling you hundreds of dollars each month for accessing this bot. Well, I'm sorry, I only put one red line here because this might be interesting. I have some strategy variations that are profitable, but that's not the discovery of the century. So for my next study, and it will come soon, I would like to focus on the It's Impossible EMA strategy. And you can already get access to the course. For the moment, it's empty because I didn't start this review yet. But you can access it purchasing the course on Whoop. So people tell me, why do you make people pay for backtests if at the end they are not profitable? So that's what I did with Phantom, for example. So the answer to that is that when I start working, I spend like more than 1 week, maybe 2 weeks, studying the strategy. At this point, before starting to work, I don't know if the strategy will be profitable or not. Yet, I do the most advanced backtest study on the strategy no one ever made on the internet. And I'm giving access that to you for your results for $20. That's literally a joke that you may think that my service is not serious at all. Well, I just want to make this affordable for everyone. So if you want to join for this It's Impossible review, we have access to the Discord where we discuss results and to the specific course. What is a whop course? This is, for example, what I give for Nexus Blast. It's like more than 1 hour of video where I'll explain the strategy, all the variations I tested, and I explain how to work through my results. Okay, so I'm continuing with my next step. TradeWin next step is to build a platform where you could, on your own, build and backtest your mechanical edges for the past 20 years for a few dollars. But this project is for now on standby because so I have been away for the past weeks studying this, making a business plan, but I came up with a need of funding, which is in fact not possible for me to fund this myself. I need external financing. But the main idea is that the tech already exists. It's a unique opportunity in the industry because nobody does that. Millions of potential customers worldwide. So for the minimum viable product, I'm looking for 500K. So if you know anyone willing to participate in that, if you know a friend, an entrepreneur, a millionaire that's interested in this project, well, he's welcome and you can join me by email. So this is the classical memes I like. TradeWin is really here to save your time and to backtest what you will never be able to do manually. So enough for the talking for now. Let's dive into what this really is about. TradeWin hourly expansions. So when you see a candle, you may know that the idea, so here a bearish hourly candle, okay? The different levels, here is the open, here is the high of the candle, the low and the close. So an example of what the price would look like on the lower time frame should be something like this, or it can be something like this. Okay, we don't care in which order the low or the high were created. We have the starting point, the ending point, and 2 middle points. Okay, so that's how you know. You may know a candle, what a candle says. So in the following slides, I will start talking about high-low hourly expansions and open-close hourly expansions. So these concepts talk and say exactly what they are. The high and low expansion is the difference, the distance between the high and the low for the hourly candle, and the open close exactly the same between the open and the close of the candle. Okay, so here are the 2 metrics I specifically worked with. So the open close hourly expansion in percentage is the difference between the open and the close based on the open price. Okay, and I do that multiplied by 100 to get the percentage, okay? And that's exactly the same for the hourly expansion for high and low. I take the distance between the high and the low, and I divide that by the opening price of the hourly candle. Again, times 100, because I want all this in percentage. So, as you may know already, my data source for all my studies is Backtest Market, which provides 15 to 20 years of data for my backtests. So, once we effectively understood how we calculated hourly expansions, let's dive into the distribution of the price expansion. Let me explain to you what this is about. So when you work with distribution of anything, we have this specific candle that appears. This candle defines several zones. Okay, here they are, and this represents these following stats. So if I have such a candle, okay, this means that if I take another example, the size of a tomato you are buying in the supermarket, okay? When the supermarket is buying those tomatoes to the producer, they specify a range in which the size of the tomato needs to be, okay? So the producer may calculate what is the distribution of the size of his tomato, okay? So it can come up with such a candle, a distribution candle, showing that, for example, if we imagine here being, I don't know, 100 grams, okay, this corresponds to the median, the second quartile of the distribution, meaning that we have half of the tomatoes sizing less, weighting less than 100 grams, and half of the tomatoes sizing more than 100 grams, okay? So if we set here 90 grams, this seems that we have 25% of all the tomatoes that weight between 90 grams and 100 grams, okay? So that's the kind of stats that show you how the weight of the tomato is distributed between the range which is studied, okay? So these specific levels are called Q1, which is quartile 1, second quartile here, which is the median, the 50% okay, level, and the third quartile, okay, where 75%, so all you have below here, 75% of the time you will have the size of the tomato being lower than this specific weight, okay? So this is really important to understand because all the next candles will be about that. So once we understood that, here is an example of the data we'll find in the following slides, okay? Imagine that, so as a reminder, I'm working on the 1 hour candles, okay, for the past 20 years, and let's imagine we have the following results. Okay, so 2 distribution candles for 18 o'clock and 19 o'clock. So this is the hourly candle from 18 to 19, and this is the hourly candle from 19 to 20. Okay. So what we can see about this is that the following here sentences are logic and right. So I can say, looking at this data, that 75% of the time, okay, which represent here the 3 quartiles of this candle, we have the hourly expansion at 18 that is greater than the overall expansion at 19. Okay, do you get that? We have here this part of the candle which is above the max here of the next candle. So this is what it says, okay? And exactly as the same, we can say that 25% of the time, okay, on the 18-hour candle, we have the same expansion as 50%, which is the same range here. So this is the 50% median, okay, the second quartile, than the 19th hour expansion. Okay, so I hope this makes sense, because if it's not, you won't understand anything about the next slides. Okay, so that's really important to understand those concepts. You may watch additional explanations on what price distribution or any distribution is about to better understand this. So the conclusion, and one of the conclusions we can make looking at this, is that entering a directional trade might be better during the 18th hourly candle than the 19th, because here we are supposed to have a bigger expansion most of the time than what we have here during the next hour. Okay, I really hope this is clear for now. So now let's bring the results from the 20-year study I made on EURUSD. Here is the data I come up with. So let's explain what we have in this graph. So here is the hourly high and low, high to low price expansion. Whether it's bearish or bullish, I don't care. What we are interested in is the distance between the high and the low. Okay. So what we can see here, you have on the axis here, you have the hour, meaning that here the first candle it's from 3 to 4 New York time. Okay, so you already understood what this candle means, and you have the value of the hourly expansion here on the left. Okay, so I want really you to understand how to study these graphs, because I have plenty of them. I made them for the 28 codes I backtested. So you will find them in the link of the description. You will have access to the Drive link where you can download this. And here is how you need to understand and work with this. Okay, I won't review all of them. I'm just giving some insights to you. So the first thing that's obvious is that around those candles, you can see that they are bigger candles, with the median here being slightly over the rest of the day. Okay, so for a reminder, the median means the 50% distribution level. Okay, this means that we have, for example, if I take the 8 o'clock here, which is commonly known as the beginning of the New York session, if I take this specific candle here, I can say that more than 50% of the time you will have a hourly high and low expansion on this specific candle greater than 0.2%. Okay, taking that again, I can say that I have 25% chance that the high and low expansion at 8 o'clock New York time is between here a bit more than 0.3 to 0.6%. Okay, that's what it means. Okay, and we can see that those candles have great hourly expansion, greater hourly expansions than what we can see in the other hours. So if you want to compare what happens between, I will say, Asian session and New York session, thanks to this graph, you can take here what happens during Asian session. So you can take the start of the Asian session wherever you want here. But let's say we are quite in here. So this specific level, you can see that the range here at 22 o'clock okay, is half what you may see during the New York session, the beginning of the New York session, okay? So the top here, where we have 100% of the high and low expansion for the past 20 years, okay? This level corresponds to approximately half here of the candle, okay? So we can say here that trading during the New York session may give twice as much the hourly expansion than during the Asian session for this specific asset, okay? So that's really important to keep in mind, okay? So for those of you wondering about London versus New York session, here you have the data, okay? So yes, the New York session, especially at the beginning, from 8 to 11, we have the possibility of having greater expansions, okay, especially here. But on average, I would say, we may have the same here variation, the same expansion than what we could have at the beginning of the London session, okay? So this is the kind of insight you can have a look at, okay? So I hope it will be really useful for you. Let's have another example. So here, I show you the two different graphs for euro again. On the left, the open close, and on the right, the high low. I believe you should be very looking at the high low, okay? Because this really shows what is really the expansion that occurs on the hourly candle. The open close for me isn't really a good indicator for that, but you can still see some of the insights we tried to understand before. That's the hourly expansion on open close, okay, is greater than during other hours, especially during New York session here. But you should really have a look at high-low price expansion graphs. So once this is said, let's study, for example, ES and NQ, which are respectively the futures for the S&P 500 and the Nasdaq 100 indexes, okay? So I'm sorry here, I don't know why the starting point here in the two graphs are not the same, but we don't care. You have the axis, the hours to find out what's really happening. So what is really interesting here for me, and it's already confirmed that what you are listening to on YouTube, that the New York session, okay, starting here 8 and especially since opening at 9:30, is the time where we see the most, I will say, volatility, the most impressive volatility for NQ, and that's exactly the same here for ES, okay? We can also say that the less active hour in the day is 17, just after the close. Okay, you can see that you have the least volatility here and a really low, I would say, moving of these specific assets. Okay. So what's interesting is that we may have from 2 times to 3 times the volatility during the beginning of the New York session than what we have during all the rest of the day, okay? So if you think maybe you want to catch huge moves on Nasdaq during the Asian session, I'm sorry to tell you that you won't have, I would say, a great here opportunity to get huge expansions. However, if you start working at the 9 or 10 o'clock, just at the beginning of the New York session, here are the most volatile moves you can be able to catch. Okay, So that's, from my view, a really important stat. So for those of you who like the stats by DR, the defined range assumption, so yes, it seems that we have for the first hour of the day, New York time, the most, I would say, volatile hour of the day. So that's true, and I'm proving this to you. I'm not just saying that and trust me bro stories, okay? Then we have a peak down in volatility, and then we continue being more and more volatile until, I would say, the end of the day. So that's the kind of insights you may have. So which one would you choose? Would you prefer to trade ES or NQ? So everyone knows NQ is more volatile than ES. So yes, here is a proof in numbers thanks to the hourly expansion. Okay, the median here, the second quartile at the opening price is 0.6%, and can go up to near 2% here, whereas on NQ we are at 0.4% on the second quartile and only going to 1.2%. Okay, so yes, first the Nasdaq is most volatile than ES. Okay, and the difference here between what we have during the rest of the day and during New York session, especially at the beginning, is a multiple of 3, where here is only a multiple of 2, from 0.2 to 0.4, and here from 0.2 to 0.6. Okay, so Nasdaq is really the asset you want to trade if you want to catch hourly big moves. But be careful, more volatility means more risk. Okay, so here is the hourly expansion for crude oil. So I really like this graph because again, we may have, as we saw Nasdaq, a really big difference between what happens during Asian session, what happens during London session, and what happens during New York session. So what this means is that on average, if you are looking at the beginning of the New York session here, on average, every day, you have 50% chance, okay, above here the quartile, the second quartile, to have a 1% move, okay, on crude oil price. Remember, previously we are like 0.4, 0.6%. Here on crude oil, we have the most crazy, I would say, expansion, which is here. Only during London session, you have something similar to the Nasdaq, okay, in terms of volatility. And here on crude oil, you have a crazy move each day on average, and it's more than 1%. So this is an asset you should keep in mind because it's really impressive, and we can witness like close to 25% of the time more than 1.5% move per day. That's per hour, sorry. That's one. This percentage is in hour. That's completely insane between the high and the low again. So you may start wondering if you want to start trading crude oil or not. So same here for gold, okay, GC futures. We have quite the same thing that ES, okay, 0.2 here percent hourly expansion, 0.4 here, okay. Nothing interesting to say, except that the Asian session and the London session have the same volatility on average. Okay, so that's an interesting insight you may have a look at. And again, the least active, I would say, hour of the day is the 17 to 18 in New York time. And the last one I wanted to share with you is the Bitcoin from 2011 to 2023. We don't have any specific, in my view, because of this chart, power hour during the day through Bitcoin. Okay, we may have always between 0.5 to 1% variation each hour, okay, but not really huge difference between the hours. So this means that you might not care when trading Bitcoin. I will say each hour can be an opportunity to trade, and you may not think in power hours or different sessions in the day when trading Bitcoin. So that's a really interesting insight for you. I will finally say that as a conclusion, power hours, in my view, and I proved that with my data, do exist, but from my view are not meaningful enough for crypto. The best assets to trade, I mean by best asset, the assets that show the most significant difference between hourly expansions are crude oil and Nasdaq. Okay, and for additional study, I really encourage you to study the graphs that I make available to you in the link of my description. So thanks again. Don't hesitate to email me, to send me messages, and to support my work. This might be one of the last studies I make because I'm running out of cash to continue this TradeWin journey for now. So thank you for your support and see you soon. Goodbye.